He survived fascism as a child, fled to Britain with nothing, and decades later took on the Bank of England, walking away with $1.5 billion overnight. That's George Soros. He's the man behind one of the most legendary trades in financial history. But that was only one chapter. Before that day, he built his own hedge fund empire, developed a unique way of thinking about markets, and became one of the most controversial billionaires alive. So how did he really do it? Today, we're breaking down how George Soros made $1.5 billion overnight and how he even got there in the first place. Soros didn't start in luxury. He grew up in Budapest, surviving the Nazi occupation by using false papers and hiding his identity. Then, in 1947, he fled to London, working as a train attendant and nightclub waiter while studying in the London School of Economics. So here's where things really start to take off. After scraping his way through school, Soros didn't exactly walk into the Wall Street glory. His first real job in finance was actually kind of boring. In the early 1950s, he landed a gig in London at a merchant bank. His job? He was analyzing how stocks traded differently across exchanges and spotting price mismatches. But Soros had bigger dreams. In 1956, he made the leap to New York. He arrived with very little. He almost took a job as a traveling salesman before he did land in Wall Street. He got a position at a bigger firm as an analyst, covering European securities. This was post-war America. Most investors were laser focused on US stocks. Hardly anyone cared about European equities. But Soros did. That niche let him carve out a specialty nobody else was paying attention to. His first few jobs paid okay, but nothing close to hedge fund money. He was just another immigrant grinding out research reports. But here's what he's built: a reputation for being smart with international markets. While most analysts only looked at American companies, Soros understood European equities and currencies, which almost no one in New York cared about back then. That outsider knowledge was his edge, and slowly he built a network of wealthy contacts. Soros became the go-to guy for managing offshore money, even doing so for the Dutch royal family's wealth or other European fortunes. That gave him credibility with rich families who were looking to place their capital outside of the traditional banks. He wasn't rich yet, but he was managing capital, taking a share of profits, and proving he could consistently beat the market. Over the course of a decade, he built up his own savings, not from his salary, but from his performance fees. By 1965, he had around $250,000. In today's terms, that's around a couple million. Not billionaire money, but enough to play the game at your own terms. And that's exactly what he did. In 1969, Soros teamed up with another young investor, Jim Rogers, and launched the Double Eagle Fund. They started with around $4 million from outside investors, plus Soros' own $250,000. His personal skin in the game made a difference. It showed investors he wasn't just taking fees, he was betting alongside them. But what made the fund stand out wasn't just the money, it was the strategy. While traditional funds were picking undervalued stocks and holding them for years, Soros was doing something radical. He was running what we now call a global macro strategy. That meant looking at entire economies, currencies, bonds, commodities, geopolitics, and betting on big shifts. One of his earliest plays was exploiting currency mismatches. For example, if a country like Italy tried to fix its currency, back then called the lira, at a rate that didn't make sense because inflation was running hot, Soros would short it. If Germany looked like it was about to raise rates while France stayed loose, he'd bet on the German mark against the French franc. He loved the pressure points, moments when governments were trying to hold reality together with tape, and the markets was trying against it. By 1970, Soros split from the Double Eagle and created the Soros Fund Management. Out of that, he launched what became the legendary Quantum Fund. Between 1970 and 1980, it averaged more than 30% on annual returns. To put that into perspective, the S&P 500 was returning closer to 10% over the same period. So investors who put in $10,000 with Soros in the early days could have walked away with millions by the time the fund hit its peak. Part of his genius was flexibility. Most investors built a thesis and stuck to it. Soros didn't. If a trade stopped working, he cut it. And if a new opportunity emerged, he pivoted instantly, even if it meant reversing a position he had just put on the day before. He famously said, "It's not whether you're right or wrong that matters, but how much money you can make when you're right and how much you lose when you're wrong." Soros's bets were so large they could move entire currencies. When he shorted the French franc in 1983, French officials accused him of destabilizing their economy. For Soros, it wasn't about wrecking countries. It was about spotting where political promises didn't match financial reality. And over, he was proven right. So by the time 1992 rolled around, with the famous Black Wednesday trade against the British pound, Soros was already a seasoned veteran of these kinds of battles. That billion-dollar payday didn't come out of nowhere. It was a accumulation of decades of refining a very specific strategy. Find the cracks in the system, bet against governments trying to paper over them, and use size, speed, and nerve to turn those cracks into fortune. And now we get to the moment that made George Soros a household name. The trade that cemented his reputation, both as a genius and as a villain. It was September 1992, and Britain was in trouble. The country had just joined the European exchange rates mechanism, basically a system that tied the British pound to other European currencies like the German mark. The idea was to keep exchange rates stable so Europe could eventually launch a single currency. But there was a problem. Britain's economy was weak, inflation was high, and the government was keeping interest rates artificially high just to fend the pound. Soros saw it before most people. He and his team at the Quantum Fund analyzed the situation and concluded the pound was overvalued and doomed to break. He believed the Bank of England couldn't hold the line forever. Governments might be powerful, but markets were more powerful. So he started building a position. Quietly at first, then bigger and bigger. Using his offshore fund, he borrowed billions of pounds and immediately sold them, planning to buy them back cheaper once the currency collapsed. This is what's called shorting. If he was wrong, he'd lose billions, and if he was right, the payday would become historic. By the night of September 15th, Soros had gone all in. His total short position was estimated at over $10 billion, an insane number at the time. His fund was leveraged to the teeth, and if the pound didn't crack, Quantum itself could have been destroyed. And this is where the story gets interesting, because on September 16th, what became known as Black Wednesday, the Bank of England fought back. They raised interest rates from 10% to 12%, and then up to 15%, in a desperate attempt to convince the world that the pound was solid. Traders panicked, newspapers were screaming, and the ordinary Britons watched as mortgage rates were pulled higher in real time. The government was essentially trying to scare speculators like Soros out of their trades. However, Soros didn't budge. In fact, he doubled down. He told his traders, keep selling. While the Bank of England was throwing everything it had to defend the pound, Soros and other hedge funds were hammering it with relentless selling pressure. By the afternoon, the British government finally caved. They announced the pound was pulling out of the exchange rate mechanism. Within only hours, the currency collapsed by 15%. And in that single day, Soros Quantum Fund made more than $1 billion in profit. Some estimates put that final number closer to $1.5 billion once the dust settled. So overnight, George Soros wasn't just a wealthy investor, he was the man who broke the Bank of England. The British government looked humiliated, taxpayers were furious, and newspapers painted Soros as the villain who had profited from a nation's pain. From that moment forward, Soros wasn't just respected in finance, he was feared. If you were a finance minister in Europe or Asia and Soros started betting against your currency, you had a real problem. However, not every deal of his was golden. In 1994, one of his bets against the Japanese yen went south, costing him $600 million in a single day. According to reports, during the Russian financial crisis in 1998, his fund lost about $2 billion, By 2011, he shut down the quantum fund to outside investors, switching it to a family office that managed only his own wealth. Today, George Soros is as famous for what he's given away as for what he's made. Through his Open Society Foundation, he's donated more than $32 billion over the years, supporting democracy movements in Eastern Europe after the fall of communism, funding education and scholarships for marginalized groups, backing independent journalism, and putting money into public health causes from HIV research to the fight against Ebola. To put it simply, he's one of the most generous philanthropists in history. That generosity has also reshaped his net worth. If he kept compounding the way he did with the quantum fund, he could easily be worth 50 or 100 billion US dollars today. Instead, after giving away more than half of his fortune, he sits at around 6 to 7 billion in 2025. Still, a staggering sum, but far less than what it might have been. So how did Soros really make his money? At the core, it was about seeing the world differently. He didn't follow the crowd, he questioned the system, looked for cracks, and trusted himself enough to bet on what he believed, even when everyone else thought he was crazy. That's the real lesson here. Be different. Don't just accept things the way they are presented to you. Think outside the box, challenge assumptions, and trust your own perspective. Soros wasn't born with advantages. He carved out his edge by studying what others ignored and having the confidence to act when he saw the opportunity. If you enjoyed this breakdown, make sure to hit subscribe. I've got plenty more stories about how big fortunes are really made.